is Mortgage 101, your guide to homeownership. We've been doing this a very long time. Thanks, everybody. If you're listening on radio, we appreciate it very much. And if you're listening, of course, after the fact, through any of the social media platforms, and very informative. We love doing this. Just give everybody, if there's the first time they're tuning into this, a bit about what you do, Clinton.
I'm a mortgage broker here in Halifax, Nova Scotia. I've been in the industry for 17 years. We've done about $1.3 billion worth of mortgages and over 5,100 transactions. So I always say, we've seen everything. But then every day we see something new. Yeah. And I think that's really interesting about mortgage lending. So many nuances. Who would believe that we'd be doing this show on the radio, 5-6 years later? Yeah. And we even said before we started our recording here tonight, right. You're listening to us on the weekend, Saturday and Sunday, but there's so much news to talk about, and there's so much that changes in this industry, and there's so many nuances around mortgage lending. It just makes it very, very interesting. It's interesting for me, and, I think it's daunting for the consumer, but hopefully our viewers and our listeners are intrigued with what we have to say, and hopefully they're commenting, and hopefully, they're calling in or sending us a message, because we love to, hear what everyone says. Well,
everything that happens, obviously, in the financial industry, whether it be Bank of Canada or the markets or whatever, it all links into, in many ways, mortgage lending. So there is that huge connection with the financial industry. I guess it's not just mortgage lending in a vacuum, right? It's so linked with everything else in the financial industry, and which is why it can be complex at times.
Yeah, it's very, very complex. Yeah. And, during the show, we're going to talk about what's going on with the Bank of Canada. They had an announcement here I guess a week ago, right?
Yeah, it was a week ago, yeah. And,
there's a lot going on in the U.S. I think there's a lot going on in this housing market here in Halifax. And, I think, it's important we need to talk about what's going on in this rate environment today. Yeah. So many existing homeowners are talking to us about what's going on with rates. So many people are coming up for renewal, and it is a trying time. So I think it's getting that expert advice and asking some questions is going to be important.
Right. So when it comes to the mortgage rate, we'll tackle that right away. It was held for the first time in a number of months now. 4.5%, I do believe, is where it's at.
Yeah. So right now the key overnight rate is 4.5, and the bank prime rate is 6.7. So if you have any consumer credit that's tied to that key overnight rate, the prime rate is 6.7, and that was maintained the same here in March. Right. And the Bank of Canada is meeting again the middle of April. So April 12th, they're going to do another announcement. Many economists are predicting that we're also going to see a hold, but there's been a bit of a segue. So in the U.S.,
what's going on down there?
There's been a couple collapses of some relatively large banks.
Yeah, big banks, yeah.
The U.S. banking system is very complex compared to what goes on in Canada. We have a very stable system. We have 5-6 big banks in Canada, where in the U.S. they have hundreds and hundreds of banks. Yeah. Where they are very regulated in the U.S., they still have a different risk appetite, and things go very well for them, and things can go very poor for them. So having a bank collapse is not necessarily unusual in the U.S.
Yeah. So you say risk appetite. Drill down more into what you mean by
I think there's some banks that maybe are more focused on credit lending. There's some banks that are focused more on like deposit taking. Right. Yeah. I think there's very like niche and unique banks that serve a very small pieces of different communities, etc. And there's a couple banks that actually have gone under now in the U.S. due to confidence really with their consumers.
Yeah.
You know what I mean?
Yeah.
One of the big ones that we were really talking about is Silicon Valley Bank.
Yeah.
And they had a traditional run on the bank, and things weren't really going great for them.
People started hearing that there were challenges with liquidity, and then they wanted money out en masse.
And there were legitimate concerns.
Yeah,
there were legitimate concerns because a lot of their consumers were tech businesses.
Yep.
Tech's not going great right now.
Right.
So they had to draw down on some of their deposits to make things like payroll and expenses and all these things. And they weren't bringing in as much new money into the bank.
Right.
So to provide the liquidity, that bank had to start selling some of their longer-term assets.
And from what I understand, a lot of those, and from what I understand, they some of those assets were invested into interest rates, bond interest rates, which were fixed and not keeping up with moving interest rates.
We'll call it.
Yeah, upside down, right? So that's kind of a perfect storm. You get caught with your pants down, literally, when that happens.
You got caught with your pants down. Yeah. You have to sell your assets at a loss.
Yeah.
And suddenly you're not liquid.
Yeah, exactly.
And then the news gets out, and guess what? Your consumers are very aware. So when you're dealing with people that are in the tech industry, for example,
Mm-hmm.
they're on Twitter and they're seeing the news. They're watching the releases from federal agencies. They know what's going on.
Yep.
And then, I think there's problems here.
Yeah.
Maybe you should move your money to a bigger bank. Maybe you should move your money to a bigger bank. And then customers start pulling out.
Yep.
They don't have the liquidity to make good on those deposits.
Right.
To make it fast enough.
Yeah.
So essentially, bank collapse.
Yeah.
Federal government in the U.S. steps in, guarantees that they're going to make the depositors whole,
Mm-hmm.
and their deposit corporation, it's FDIC,
Right.
in the U.S., they will protect all individual depositors up to $250,000.
Mm-hmm.
The challenge is most of the consumers of this bank were businesses.
Yes.
So $250,000 probably doesn't even cover a payroll run.
No, exactly.
So very problematic. Likely a bigger bank will come in and buy their assets and amalgamate them in.
Mm-hmm.
But it still provides a lot of noise in that banking industry.
Yes.
And it provides a lot of uncertainty within that consumer base.
Right.
Luckily in Canada, we have a very stable market.
Mm-hmm.
Our big banks are quite rigid and are very conservative compared to how banks are in the US.
Right.
You walk into a bank branch, you have to fight to get credit oftentimes.
Yeah.
And even I see prime customers get denied for mortgages that I'm like, this is a slam dunk.
Yeah.
It's just because the risk appetite sometimes with people in general or the banks are not all the same.
Yeah. And it could be the property, obviously, as well.
It could definitely be the property.
Yeah.
But just kind of going back to what happened in the U.S., this consumer confidence has now really impacted what's going on in the bond markets.
Yeah.
So now they are starting to tank, which means the rates are going to go down, which means maybe the Fed will decrease their rate. Will that have an impact to Canada? I think down the line, it probably will. Somewhat what happens in the U.S. happens in Canada. Will the Bank of Canada lower the key overnight rate April 12th? I don't think that's going to happen until inflation is under control.
Yeah.
But we may see fixed rates soften
Right.
if these bonds are still going to be on the downward trend.
Yeah.
So,
Well, I
we'll
guess,
see.
and the other thing is that, and it probably speaks to more what you deal with on a daily basis, is people hear these stories, they listen to shows like mine, and they don't delineate between American banking industry and the Canadian banking industry, and perhaps think, well, could this happen here in Canada? And you probably get calls with people with those concerns, I'm sure.
Definitely. And
Yeah.
we deal with a lot of trust company broker lenders that are actually banks. They may not be deposit-taking banks, but they're banks. And we've had a run on the bank here in Canada somewhat recently that the bank almost collapsed.
Yeah. Which bank?
Home Trust,
Right.
and they operate under a couple entities. They're deposit-taking as well.
Mm-hmm.
And they had an old-fashioned run on the bank where depositors were wanting to withdraw their deposits, and they didn't have enough liquid capital to make good on that.
Yeah.
But they had an investor from the U.S., actually Warren Buffett, come in, make them whole. They were able to get their finances straightened out. They brought in a great new turnaround CEO,
Mm-hmm.
and they were able to get a credit facility that was syndicated by the Big Five.
What's the advantage of somebody to come in to save it?
Well, I think their assets were more than their liabilities.
Right.
And I think they had some viability within that business. The business made money. The business did really good work.
Yeah.
Home Trust has an office here in Halifax on Lower Water Street.
Right.
We do business with them every day. They're very valuable within our community, and they do a lot of transactions.
Right.
And oftentimes, they'll help consumers that might not be able to get a mortgage somewhere else. So it is really a key part of what we need.
What do you want to talk about next?
We're going to talk, obviously, about what's going on here. Spring market. Is it the right time to buy?
All right, sounds good. We will be right back. Mortgage 101, your guide to homeownership.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.